Want to know which investment can make you rich through inflation? Stay tuned to find out. The constant increase in prices across the board, including those goods and services, is what makes economists mean when discussing inflation. It occurs when there's a higher demand for goods and services than providers available to meet that demand. Since inflation can make it more difficult to keep one's quality of living constant over time, it may have a major influence on buying power. The price of goods and services stays the same, but inflation makes buying them more expensive. As a consequence of these, it has a direct influence on the amount of discretionary cash that people have for expenditures such as entertainment. Because the market is in constant flux, business owners need to put in significant effort to preserve and grow their wealth. Increasing prices may make it more costly to maintain one's existing living level, reducing a company's real profit. Consumers need to carefully consider all of their many buying options to forestall the steady erosion of their purchasing power that results from inflation. If you operate a business and want to be financially successful, then you need to educate yourself on inflation's impact. Investors have a better chance of protecting their money from the effect of inflation and reducing their vulnerability to the possibility of price increase if they spread out their spending. Real estate as an investment. During inflation throughout history, financial success might be attained by investing in real estate purchase at a premium price. The land is appealing because it can be experienced instantly by the sense of hearing, touch, sight, and smell. This makes land a desirable investment. In contrast to stock and bond, real estate is an asset whose value has the potential to increase over the course of time. This suggests homeowners can safeguard themselves against increasing costs by depending on rental income. Finally, renting out a home or other properties might be a risk-free way to bring in more cash. The additional benefit of real estate transaction is the possibility of obtaining cheaper interest rate by using the property in question as a collateral for a loan. When property owners use their home or other real estate as collateral for loans and lines of credit, the term of the loan and line of credit may be modified to be more advantageous for both the borrower and the lender. If buyers were permitted to use the property they were acquiring as a collateral for a loan, they will have more flexibility with the finances and more advantageous lending circumstances. Because purchasing a house is a significant financial commitment, it is essential to give the decision a great deal of thought and prepare adequately in advance. Before making significant investment, it is important to carefully analyze the property's location, market, and maintenance costs. It is important to consider not just the initial purchase cost, but also ongoing costs like taxes, upkeep, and insurance. Equities as an investment during inflation. Buying shares in a company when trading at a premium might be a fruitful investment strategy in the long run. If you invest in stock, you can protect your buying power from the effects of inflation. Businesses can raise their prices to react to inflation since doing business is now more costly. The stock market may gain if businesses can maintain the current profit margin. Before you invest in any of your money into the market, you need to do a lot of research on it. Before investing their money in a company, potential investors should educate themselves about the company in question as much as possible. Investors may get some insight into a business ability to maintain pricing stability by analyzing the growth of the company's revenue and profit margin, as well as the total debt and market share. Price hikes benefit businesses with astute management and substantial financial resources. Companies that can increase their pricing in response to rising costs are in a stronger position to stabilize their profit margin. Despite the pricing increase, the level of demand from clients may remain the same. This is fantastic news for the businesses that provide these goods to their target demographic of customers. One strategy for reducing the overall risk of an investor's portfolio is to diversify the investor's stock holding. Your investment portfolio may be more resistant to the effect of inflation if you distribute your holding among various firms, geographical areas, and market sectors. Increasing your return on investment and lowering the amount of financial risk you are exposed to may be accomplished by spreading your asset out on several different marketplaces. Because of the extreme volatility of the stock market, any money you invest in it will be vulnerable to the ups and downs that are characteristic of the market. The value of a business stock may be influenced by some factors, both internal and external, including the state of the economy and the stock market, as well as the events that are unique to the firm. Traders should first assess their long-term goals and the degree of risk they are willing to accept before investing in the stock market. Users have access to a vast array of informational resources both online and on their mobile devices, which may assist them in making more informed acquisitions. Investigating the company's financial record, yearly report, and the finding of a reputable research may provide you with a wealth of information on the company's historic success and its potential to advance. In a inflationary environment, purchasers who are well informed on market trends, economic facts, and corporate news may do better financially. Commodity as an investment during inflation. Investing in commodity is one of the ways to profit and protect oneself from the effects of inflation at the same time. Examples of commodities are food, gasoline, and precious metal like gold and silver, considering that the value of commodity often increases over the course of time. Investing money in them is an excellent way to protect oneself against inflation. It is possible for the purchasing power of $1 to fall when more things are produced that need more money. The price has increased as a result of the growing demand from a variety of different businesses. The price of anything will go up if more people want it than there are resources to offer it. Metals have the potential to rescue stock if inflation rates continue to climb steadily. In contrast to stock and bond, the ups and downs in the commercial and financial market have no impact on the price of commodity. The commodity market makes it more suitable to fluctuation in price and volatility than the rest of the economy. Using a diversified strategy that includes trading commodity might be beneficial for lowering total risk. One strategy for protecting oneself against the risk of a decline in the value of a currency is to make investment in metal. Keeping prices at the same level as they were before the inflation started is one method that may be used to reduce the effect that inflation has on the buying power of a currency. If you want to protect yourself and the current monetary system fails, you may invest your money in a precious metal like gold and silver. When working with metals, one must be aware of the inherent risks and take precaution as necessary. Changes in supply and demand, broad economic trends, and big events that take place worldwide are some of the things that may impact the price of commodity. When you are out shopping and have trouble finding a certain item, it is your best interest to seek assistance as a knowledgeable person or go to a store that specializes in that particular good or service. This market makes available to buyers a wide range of investment and alternatives, such as future contracts, exchange-traded funds, and physical commodity, amongst others. Before deciding whether or not to invest in commodity, it is important to evaluate your current financial situation, short-term and long-term financial goals, and risk tolerance. Inflation-linked bond as an investment during inflation. Treasury inflation-protected securities, sometimes known simply as TIPS, are inflation-protected bonds issued by the United States Treasury Department. Bonds are being released so that investors may have a low-risk option to retain and grow their money while benefiting from their investment. Bonds that have a fixed interest rate that is tied to inflation may have their interest rate altered to either higher or lower, depending on the level of inflation. Inflation index bonds have interest rates that shift in response to change in the overall inflation rate. In its place, it moves up and down in tandem with the total inflation rate. The findings suggest that bond interest rate will rise in tandem with inflation in the future. The value of the investment would not negatively affected by the impact of inflation. Bonds linked to inflation protect investors against the risk of a rise in general price in the future. This is the utmost significant during a period of rising inflation, when the purchasing power of a person's saving may be jeopardized. By indexing the bond's yield and principal value to an inflation indicator, inflation-linked bonds provide investors protection against the risk of experiencing price increase. Bond buyers interested in inflation indices should conduct their research before purchasing bonds. These bonds, just like every other kind of financial transaction, come with a unique obstacle to overcome. You should carefully consider the state of the market, the loans available to you, and the interest rate before making any significant choice on your finances. The buyer's capacity to make future financial and lifestyle commitment may be impacted depending on the purchase, so prospective purchasers should consider this. Those who want to be certain that they will always get their interest payment should look into acquiring bonds indexed for the inflation rate. Earnings from rent are reliable. The property's value has the potential to go up, and the owner can use equity to get loans if they want. Choosing companies with strong fundamentals or a dominating market position might be a great way to protect your portfolio from inflation. Gold and silver are excellent assets for investment since their value has a history of increasing in concert with general price increase. Bond buyers who purchase inflation-linked securities benefit from a risk-free investment choice and are protected from inflation adverse effect. Consider your present situation, the amount of risk you're willing to take, and your long-term goals before making any decision about your finances. When it comes to making money in the stock market, different individuals will have different levels of success with different tactics. To effectively manage your money, you must educate yourself on personal finance. Talk to people who are expert in either the field of finances or the area of study that most fascinate you. They could give you client helpful advice tailored to the customer's particular requirement and inclination. If you found this information to be meaningful, please subscribe to my channel. See you on the next one.